What's your reaction to this news from UBS?
Well, I think this is quite an important tipping point for UBS, and obviously going back to the financial crisis, which caused management change and a reconsideration of pretty much everything they did in investment banking. Fast forward 3 years and you've had a significant loss. Significantly, they're saying because it's an unauthorized loss, which makes it look like the whole compliance procedures that have been put in place are still inadequate. I don't want to speculate too much on the nature of this loss, but clearly shareholders whose patience had been running thin with the investment bank are going to be asking some very hard questions now of senior management.
And what do you think might happen next to UBS as an entity?
Well, as I say, I mean, this ultimately will be shareholder-led. There are serious question marks, as we've been talking about over the last few days, about funding for investment bank balance sheets and whether, in fact, investors have simply lost patience with the very low returns in the industry. There will be significant balance sheet downsizing. There may even be significant banks leaving the industry over the next several years under the combined pressure from regulators and investors through funding markets. And UBS has been a prime candidate because its returns are so much lower than everybody else's.
Word on the street is that this was essentially an FX trade, that when the Swiss National Bank stepped in to intervene to stop the appreciation of their currency, we were seeing these vast moves in the currency markets, that this may have been as a result of that. I know you don't want to speculate too much on the details because we don't have any confirmation, but what are your thoughts on that?
Well, in many ways, if that is what's happened, it's almost a more forgivable trade. I mean, clearly, it was a very sharp one-off move, and it's quite possible that traders would have on a position that in the normal range would be perfectly authorized, but because of the extreme one-off move in seconds, blew out to a size that became unauthorized. And given it would be a one-off in nature, the ramifications for senior management would be relatively small, I think. But there's a much broader point here. There is tremendous pressure on investment banks, and UBS in particular, to drive up revenues. They have some high revenue targets for a couple of years out. They are nowhere near getting those revenues from the current levels of client business, and there is tremendous pressure on the bosses within the investment bank to generate extra revenues. They're going to be taking extra risk to do that. And consider the prospect that the regulators themselves are the people who are putting this pressure on UBS. They've demanded such a very high level of capital at the bank that they may have to take bigger and more extreme positions in order to generate a return. So it may actually be that the capital positions that are supposed to protect investment banks are actually triggering more significant one-off losses.
So actually what you're saying is that we're entering a vicious circle, that the sort of measures, the regulation in place that is supposed to be protecting these banks is resulting in more risk, if anything else. Does this mean that we could see more such losses then from other banks?
Well, generally there is overcapacity in the investment banking industry. And there are two reasons for that. One, obviously market volatility is crushing the natural flow of client business. But two, regulators post-Lehman have basically not allowed any banks to go to the wall. They're insisting that banks put more and more capital into their businesses, and that's obviously creating overcapacity. Capacity is measured by capital. Banks are going to be out there taking risk in order to try and get a decent return on it. And until we start to see balance sheets downsized and capital withdrawn from the industry, these type of risks are going to happen. It's UBS today, it could be someone else tomorrow.
And just a quick one then on, I mean, this comes, as you say, in terms of the context of UBS, this comes after it said last month it would shed some 3,500 jobs as part of a sweeping cost-cutting program aimed at reshaping the business. Already its investment banking division was struggling. As you say, we've seen this across the board with many banks. Now these divisions are struggling to generate profits, right?
You know, we know UBS used to be absolutely at the top tier of investment banking. They fell by the wayside during the crisis. They had significant management change and upheaval. And it's absolutely right that a new management team coming in should try and restore the bank to its former glory. The problem is their place at the top table has been taken by other banks. It's not as if there's an empty seat there waiting for them to get back on their feet. And as they kind of build up the business and build up the staff levels to try and get back to where they were, they're finding it extremely difficult because there are some high-quality, aggressive competitors out there who have no intention of letting UBS back to the top table. And that's the pressure that they're under. And they're not alone in that pressure. There's a number of other banks in a similar position.
All right, good to talk to you. Thanks very much, Simon Maughan of MF Global, giving us his reaction as we continue our breaking news coverage of UBS's $2 billion trading loss.